Okay, so I said I'd do an update video on the pattern, and oh, I said I'd do an update on the pattern, and it's playing out perfectly. So we were here in the video, I believe, with non-farm payroll. We're about to come out now. Let's go on the 1 minute chart, and you can see what they did when non-farm payroll came out. Non-farm, where are you? Here. So right here, non-farm payroll came out, which it doesn't change anything in the market. Like right there on that candle, 30, that green candle right there. You see how it gets aggressive. So nothing changes in the market when non-farm payroll comes out. Just what happens is they're using news announcements to send price in one direction, false move, then do it the opposite way. So see, non-farm came out, came up, then they slammed it back down, trying to get traders to think that that was a false move, and then they went up. Why? Why? Because they wanted to complete their cycle. Yeah, this cycle right here. That candle was very telling. Quite honestly, if I day traded Bitcoin, I would have got in that, but I don't day trade Bitcoin. I day trade Forex. I could day trade this if I wanted to, but Forex is more nicer. Like, quite frankly, Forex is just better. Crypto's more a swing trading thing for me. Cause that's what you do. You buy and hold fucking coins, or you swing, or you can scalp it, and I've scalped it before. I just don't scalp it that much. Okay. That's what happened in New York's stop pump box, and then it just carried on all throughout New York. We're there in the pattern, guys. It's quite clear to see that. Unless this pattern breaks down here, then it more than likely won't go any lower. For me, this is just a big stop point. Look what they did. They're just pinning the lows constantly, pinning the lows. Yeah, all the people who got it right got wiped out, and then there's going to be a fast move up from what I'm seeing and what I know about the market. Yeah, so they're gonna range out in this bit. Yeah, so you see it spikes up, spikes down, spikes up, spike up, down, spike up, down. Yeah. We're going to see a bit of a range out here. Maybe a small drop here. Let's find us a place on the 1 minute where it could drop right there. That's quite bait. That's also quite bait. Could drop here. That's just one big liquidity pool. I'll just draw them separately. Right there. Right there. Let's get rid of the other fucking orange boxes because they're going to piss me off. Let's get rid of that one. I'm going to have to go up 15 minutes to get rid of that. So I want to see Bitcoin stop punt down here before it moves further. Why? Because they want to get the liquidity back and they want to wipe the retail long orders out, and they want to get people committed to the short side. This pattern is just to get people trapped with volume. Look, the deadly drop. Everybody wants to get in it. Asia, deadly drop. London, oh, they're coming back for a retrace. Oh, it's moving fast. Let's get in the short. Volume trap, volume trap, volume trap, volume trap, volume trap, volume trap. Yeah. Volume trap. Once more. Fourth time. It's to trap the volume. Now, I'm not saying this pattern has to do it. It could get here in the pattern and just tumble down. It could get here in the pattern and tumble down. It could get here and keep going back up. You get me? Anything can happen. And as long as you approach it with that mindset, you won't be left crying like a little baby. Yeah? So where is this pattern more than likely going to bring us? From what I'm seeing, this is going to bring us to the 52k mark. The range weekly high at least. Yeah? 50k at least. If this bit of the pattern's done it for 2k up, then this bit of the pattern's 3 times more. So I'd be expecting at least a 6k pump, which would, well, my math's even right there. 52k, 46, 6k more, 52k. Yeah. The range weekly high will more than likely be hit. So, yeah, what's happened? What? I'm just expecting rangy, spiky shit overnight, and then maybe tomorrow on Saturday. Well, remember, guys, it's Saturday, so It's Saturday, so yeah, it's Saturday, so the markets aren't fully open. You get me? The exchanges aren't open. Like I said before, we went over it in today's video. Let's get BTC up on Chicago Mercantile Exchange. Where are you? CME. You see that big gap there? That's over the weekend trading. It doesn't trade on major exchanges, so I'm actually thinking this could be quite a psychological thing. But I also want to talk about gold as well. Gold. Right, let's just get gold to where I want to speak about it. Right. So Bitcoin, it did a big stop hunt for me. It filled the gap, and they covered their asses while taking loads of retail traders longs out. Yeah. I'll be back in 1 second. Right, I'm back. I'll put in the description that you need to skip that point because I took longer than expected. I was speaking to someone. Yeah. So Bitcoin, right? The psychological thing, right? So the CME, Bitcoin stops trading on the CME in. I'll show you where it stopped trading last week, so you can just visualize it if you don't know trading. At 10 o'clock, yeah. You get that? So at 10 o'clock. No, 9 o'clock. Why is it saying? No, it's because it's daylight saving. It's 10 o'clock. It's 10 o'clock. Right? 10 o'clock, it stops trading. So at 10 p.m. tonight, so 2 hours, that means 8 more 15-minute candles, the exchange will close, yeah? So what does that mean? So the exchange closed here, and it filled the gap. Now, if it were to play this pattern out, then there would be a massive fucking gap here. Which would bring us to 52k, which would be in line with the cycle, and it would be in line with everything else. But it might not go down and fill the gap straight away. Now, this is the psychology behind it. If the gap up once, fill it, then the gap up again. Every trader's going to be looking for them to fill it straight away like they did here. Yeah? So something different might happen. It might just fill straight away. I don't fucking know. Now, let's get on to gold. Gold stop hunted and it didn't actually break this range. Bitcoin stop hunted and break the range. Why? Why? Because there was a gap on the CME. Bitcoin is more volatile and they were fucking sickened at how much money was down here. Three simple explanations. Not because sellers came in to sell, not because buyers weren't buying. None of that bullshit. Not because Fibonacci said it was simply because there was a gap on the CME. They wanted to wipe the retail traders out long. They were sickened at how much money there were down here, and crypto's volatile. It's just that simple. Yeah. Right, so let's get back on to actually Bitcoin. And let's get onto the pattern. Now I want to do another video on Bitcoin in the bigger pattern, because I'm sort of just I'm not even going to come prepared with a video, right? I'm just going to come to it and try see shit on the chart and compare patterns, because I think the pattern will play out quicker than I'm expecting, and if this pattern were to play out on the 4 hour, it'd take way too long. Yeah, this economy ain't got much backbone in it. It can't take that long. Right. So, see it? Rise, drop, rise, drop, rise, drop, rise, drop, rise, drop, rise, drop. Yeah. Now, this chart on the right is from 2010. I see this play out every fucking day. A 1 minute chart, 5 minute chart. You get me? Same with this, same with that, same with that, same with that. And I just keep adding more caliber. Same with that. That's like more of a line chart, so you have to know what you're looking at to look at that. But that is essentially the start of that. Down there. That. Yeah? Right. So this pattern, can you see it? I hope everyone can see that. We're around here in the pattern, yeah. Just drop, right, drop, yeah. And the liquidity pools lie on the 50 MA, and on here it comes to the 50 MA. But you don't have the indicator to help you there, so I would like to see an indicator down here, but this is a 2010 chart and they didn't have the indicator on, so what can you do? But yeah, it comes down to the water, which is the blue line, and just sort of chops and chops, and then there's a big rise. Yeah, that big rise would more than likely bring us up to, I've already marked it off, that box right there. Yeah. Do a drop. Oh, test the high. I did it in that voice because it doesn't test resistance. It doesn't do that. Oh, we're testing support. That isn't happening, people. The market makers are making it look like that happening, so you're committing money to a trade. Now, when it tests support, yeah, quote unquote resistance or support, whichever fucking one you want to call it, retails will see a small profit, more than likely to the range weekly high or to 52k. You know, the liquidity pool on the daily chart, people. We've been talking about this. It will be seen. It will be seen. Yeah, it will. 51k. It will be seen very shortly in the coming week. You know, supposedly to this pattern in a few days. Yeah, catch my drift. And that fucking candle doesn't get any more telling than that. Let me tell you that. A big fat pin to the market maker spread, which is the range weekly low and range weekly high. The psychological high and low for the week. Look, Sunday set the psychological high and low, yeah? That's where the market makers set their spread. That's where they gather their orders and set their spread. Look, they set the spread and they saw a big return on the longs that they built up. Then they dispersed the shorts throughout the week. Then they came back into the spread to get all their orders and all their liquidity back, wipe all the retail out who started trading long at the week, then move away. And let's get to gold. So that's this pattern. I'm expecting it to bring us to the range weekly high. 51, 52k. I think they're going to test 52k just because the amount of stops up there is disgusting, and they will all lie at the 52k mark. It will, if we get to 52k, it'll be climatic behaviour. Like, I'm talking erratic moves up, spike up, spike up, spike up. Yeah, it might range out on the 1 minute. Yeah, spike up, then do that, then do that. Yeah, I don't fucking know. I'm just going off what I've seen before. So let's get to gold and compare. So this is just adding caution to caution, people. I don't want to see anything else. Right. Yeah, so this is gold. I'm just adding caution to caution. The stop punt, yeah. Look up, big climatic behaviour at the top. And then from the gap, the quote unquote fucking gap shit, yeah. It will more than likely fill the gap. Yeah. And to retail traders, it'll just look like a pump and dump, a big stop punt to the high, when they don't know what fucking cycle we're in. Yeah. And it pisses me off. They don't understand the cycle, and that's why people get money. It's daylight robbery. This market, people, daylight fucking robbery. It's the easiest, hardest way to make money. I'll say that. Yeah. So what? Right, wrapping it up. Fucking cut the shit. I'm expecting sideways behaviour and spike up, come back down, spike up to the range weekly high 51, 52k. Yeah, if we break here, the pattern's invalidated, and I want to see a drop to 42k. It's as simple as that. Goodbye.